Hello friends, you are all welcome. I hope you are well. Today, I'm going to try to show you a buy and sell scalping tactic in a 5-minute period. I hope that will be useful. As I always say, nothing I tell in this video tutorial is in the nature of investment advice. Do not open transactions by following these, you can get big losses. Thank you in advance for listening to me. Friends, today, I will try to show you the buy and sell tactic in a 5-minute period using 3 moving averages. First, I'm bringing up EMA from the indicators. As you can see here, I click on the moving average 3 times. After clicking, it appears on the screen. We change their values. We change the initially MA to 25. Let's not forget to change the colors because I will tell you the tricks. I'm making the 25-day moving average white. Let's thicken the line a little. I'm also making the 50-day moving average orange and making the line a little thicker. 100-day moving average. What shall we do? Let's make the color blue. I'm making the line a little thicker. As you can see now, I have 3 moving averages. First of all, let me tell you the places that I should pay attention to. 25-day moving average in white, 50-day moving average in orange. And the blue one is the 100-day moving average. Before entering the transactions, we should pay attention here. The most important thing to consider is that the 50-day moving average should always be in the middle. In other words, the 25-day moving average and the 100-day moving average being lap streak doesn't matter to us. But the 50-day moving average should always be in the middle. Because we will both get the signal to enter the trade and then the signal to get out of the trade from the 50-day moving average. What is this? Look, as you can see here, the 50-day moving average and the price intersect and the price is rising. A candle close below the 50-day moving average happens and the price goes down. What is our logic in moving averages? When the short moving average crosses the long moving average upwards, it forms a buy signal. As you can see today, we will examine the intersection of the 25, 50 and 100-day moving averages. Let's check one by one now and move on. Looking at it now, the candle is making it close above the 50-day moving average and we can see how prices are rising on a 5-minute chart. Our stop here is entirely dependent on our risk analysis. This is your choice because if you want, you can stop when the candle closes below the 25-day moving average or when the candle closes below the 50-day moving average. You need to pay attention to these first. Let's not forget these. We can enter the trade when the candle closes above 50-day moving average. Cause for us it's both pullback and also a confirmation candle. I can tell you that it is the most suitable place for us to open a transaction. Now, when we look at it, let's enlarge the screen a little. The candle is closing above the 50-day moving average. Next comes a red candle. But the price does not sag below the 50-day moving average, it stays above it and you see it leaves us a very nice profit rate. For example, let me show you this. Let's assume that the candle closed and we entered the trade from there. It leaves us a very nice profit of almost 0.50 on a 5-minute chart. I go a little further back. As you can see, the candle closes above the 50-day moving average and then we can see that the prices are rising. Friends, there is an increase of about 1.5%. Again, I go back a little further. The candle closes above the 50-day moving average. Prices are rising again. As I said before, what are we paying attention to here? The 50-day moving average always needs to be in the middle of three moving averages. Because we use the 50-day moving average both for approval and also consider it as a trade entry and exit indicator. Let's not forget this. We always know that when the short moving average crosses the long moving average upwards, it creates a buy signal. In addition, let me tell you this: if 25-day moving average is above, 50-day moving average is in the middle, and the 100-day moving average is at the bottom, we can predict an uptrend will begin in the market. Now let's go back a little further. Look, the moving averages have completely changed places here. 25 days moving average is at the bottom and the 100-day moving average is at the top. So here we can understand that there is a downtrend. What do we pay attention to? The 50-day moving average stays in the middle. When we look again, like that, look, the candle is closing above the 50-day moving average. Prices are rising. The candle is closing above the 50-day moving average here again. Prices are rising. Here the candle is closing. Then comes a huge fall. Unfortunately, we stop here because we are entering the process here. This creates a buy signal for us, but suddenly there is a sudden decrease and we stop at the candle here, friends. We cannot avoid them. Unfortunately, these things happen, but when we look at the total, we usually get profits from the transactions. Friends, we use moving averages as scalp trading. Well, what matters to us is this. Moving average is to enter and exit trades. As you can see, we cannot enter the transaction in any way here. Look, there is a huge difference between the moving average and the price. The candle does not even touch the 50 days moving average. I go a little further back. As you will see here, the moving averages are completely changing. The 25-day moving average is at the bottom, so what does that mean? It tells us that there is a downtrend. But even in a downtrend, when it gets a reaction on a 5-minute chart, we can earn little profits. For example, the market is in a downtrend here as well, yes. The candle closes above the 50-day moving average and we can see how the price has risen here. Look, the price is falling again, it closes above the 50-day moving average and price rises again. As I said before, where are we going to sell it? It's up to you, friends, to decide. Likewise, there is a nice profit rate here. It's the same here as well. As you can see, our logic is actually simple. 50 days moving average will stay in the middle and there will be a buy signal at the close of the candle above it. When it hangs below it, that is, when the candle closes below the 50-day moving average, it will create a sell signal for us. So if I say sell, it will stop us. Scalping trades with moving averages are generally successful, but of course it does not give us a 100% successful result. It will necessarily stop us, cause us damage, we cannot prevent them. After all, this is a financial market. These will necessarily happen, but when we look at it in general, I would say the rate of profitability is higher. Yes, it makes you lose, but the profitability rate is also high. We just need to know using the conditions in the right place and at the right time. Other than that, there is nothing else to do. The real logic of trading is based on moving averages, friends. That's all I will tell you in this training video. As I said, nothing I tell in the video is in the nature of investment advice. Please do not invest based on these, or you can get big risks, big losses. Thank you for listening to me. See you in the next training video. Good luck.